I'm Lee Scully. I'm an associate investment advisor at Bishop Cross Border Investment Services. This is Stephen Bishop, our lead advisor and founding member. We help Americans living in Canada and Canadians living in the US with cross-border investment accounts and how to manage them, how to be compliant with them. One thing we've talked about quite a bit lately, and I think will continue to be a hot topic, is inheritance. So especially when you have assets on one side of the border that are to be inherited by someone living on the other. And people don't really know where to start in terms of how do they set themselves up to receive that properly, or what happens when it does come to them. What kind of account can they keep an IRA open, for example? And that's actually more of a simple answer than some of the other questions we get, but we often deal with what's called an inherited IRA. Stephen, maybe you want to speak to how that account works.
Yeah, well, it is simple, really, for us to deal with it, but it's actually not complicated for the beneficiary either, because all that has to happen is we're contacted. The person advises us that they have a family member that's dealing with a U.S. brokerage that had appointed them as the beneficiary of their IRA account. And all we have to do is open a new account on the Raymond James USA platform called an inherited IRA. And so the person, let's say the person's living in Nova Scotia or New Brunswick or Prince Edward Island or wherever. And we just open that account up for them. And then we provide the instructions to the firm, the brokerage firm in the States where the deceased person had the account, and we transfer the account. And so it's a mechanical thing. The beneficiary now has the IRA, and then there's just rules that apply to that inherited IRA currently that dictates the timeline on how soon or how the frequency of how the money has to be withdrawn. And it's right now it's over a 10-year.
The 10-year rule.
10-year rolling period. But as far as the issue with the dealing with it, it's not that complicated.
It's not, as long as they find us. Yeah.
As long as they find someone to do it. But the U.S. brokerages what they'll say to them is, you need to find someone to help you with this.
As a Canadian resident.
If you're, well, even if you're a U.S. resident, it doesn't matter. They still. I mean, if it's in the U.S., the brokerage firm that has the account will probably do it. Will probably do it because the person's U.S. resident. But for those that are living in Canada now, whether they were a U.S. resident before, or whether it's just a family member that lives in Canada and they've appointed them as the beneficiary, or designated them, as the beneficiary, that requires to find a firm and an advisor who's licensed to hold an IRA.
That's right.
So you need to have someone who's cross-border licensed. That's right. Firm needs to be cross-border licensed. Individual needs to be cross-border licensed. And then if they find us, then they can just ask the questions, and that's right. That's pretty straightforward, really.
And the question I get most is about what happens when it's all settled and the account's in their name. And really it's about explaining that 10-year rule. So typically from the date of the original account owner's death, that triggers a 10-year window within which the inheritor has to deplete that account fully to zero. Doesn't have to be done all in one swing. It can be. That's the flexible part of that rule, is that they can take it all out in year 1. They could take even chunks in all 10 years. They could take it all out in year 10. And that often depends on, does the person need the cash for something? Do they have an investment objective they're pursuing? Is that going to integrate with the rest of their assets? So it's a discussion about that.
Yeah.
And it's about...
Sorry.
No, go ahead.
It's really about receiving an inheritance.
Mm-hmm.
And what do I do with it?
Yeah, exactly.
Right.
Yeah.
It's so it takes on its a life of its own,
Mm-hmm.
depending on the person who's receiving it. As you say, it just has to be withdrawn over 10 years.
That's right.
And so, if a person needs, but when the money comes out, it's taxable.
That's right.
So it's not like you just get this gift and you can just take it. If you're already paying tax or in a high tax bracket, then it becomes a planning issue as well.
So sometimes you almost want to defer it to the end, but in some cases you can't. So if the original owner was already taking distributions, you have to keep doing that every year.
Yeah. So the first step is the individual finds a cross-border licensed advisor who can take the account
Mm-hmm.
for them, and then they meet with the advisor to discuss and determine their situation, and then the frequency of the withdrawals, and then you even get into the timeline for suitability of the investments. So just say, for instance, if the person inherits an IRA, that's 100% in stocks. Let's just say simple. It's 100% in the Standard & Poor's 500 index ETF. Okay, so they inherit that, but their timeline on withdrawing that money is 2 years. So it's short, right? So it's not like the money is going to be invested for 10 years or 20 years and has all kinds of time to
ebb and flow and
to deal with the markets up and downs. Okay, so let's say someone inherits an IRA, and let's just say for the conversation it's $500,000, just say, right? So, but their plan is, after the discussions with us, that they would like to withdraw that money over 3 years. Well, they might want to consider what they do with that money while they're waiting for those 3 years, because maybe they don't want to leave it in the stock market. They know they've got $500,000. They can crystallize that with no tax implications within the IRA, so they know they've still got $500,000. So they don't have to worry about the $500,000 being worth $300,000.
Which can happen within 2 years with stock markets.
Sure can.
Yeah.
Your market's correct. So the conversation with the individual who inherits the IRA is subject to a lot of pieces. So first of all, we can facilitate this, but then the real work comes with, okay, now what? This has to be depleted over this 10-year window. What's your investment experience? What's your tolerance for this going down in value? What's your experience with investing in stocks, if any?
Determine what's suitable for them.
What's suitable,
right?
and so the conversation takes on a whole new life to suit that individual who's inherited the money, not the person that just passed away.
Right.
Because the person that just passed away could have passed away suddenly, had a completely different idea on what the money was going to be invested in. That's over.
It's almost like a point to just reset
It's
what's in there. It's a rebalancing window that you want to look at.
Yeah. To align with the objectives and the situation of the
inheritor.
beneficiary,
Exactly.
the person that's inherited it.
Exactly.
And that's actually that's probably a bigger conversation than just transferring the IRA, because that requires some work and some thought and so on. But as with everything else, it's just we that's what we do every day. It's what we specialize in. It's nothing new to what we do as a group, and a person that finds us, all they have to do is reach out and ask for a consultation, and then we can give them all the information that they need to deal with that situation.
Yeah, that's right.
Yep.
No, this is a good discussion. I do want to throw out one more piece of information for people that I think they would find helpful, just because I get the question a lot, and it's pertaining to the early withdrawal penalties that apply to normal IRAs, which is, if you're 59 and a half or younger, there's a 10% withdrawal penalty.
Yeah. That
does not apply to inherited IRAs. Mm-hmm. So if you inherit one as a 40-year-old, you won't have any early withdrawal penalty. That's, it is taxable, but you won't get penalized. So I guess that's the bright side of that.
Well, just think if it was a 30-year-old.
Or a 30-year-old.
They're only going to be 40 by the time the 10 years is up.
Exactly.
So it doesn't make any sense.
So the IRS does allow for that.
Yeah,
so
it's good for people to know.
Exactly.
The rules, yeah.
Yeah. Yep. So if people want to find out more, we've got articles on our website. They can reach out to us, send an email, give us a call.
Yeah.
Yep.